Hello and welcome back to Understanding Crypto. My name is Herve, and every other day on this channel I bring you things like predictive analysis, research and tutorials in the easiest way possible on the internet. So if that's the type of content you find interesting, be sure to click that like button and subscribe to the channel so that you always get videos like this in time. Today we will cover Arbitrum, similar to how we did with Manta network, so I hope you will enjoy the video. So Arbitrum is a layer 2 scaling solution designed to enhance the scalability and efficiency of Ethereum-based decentralized applications, or dApps. It aims to address Ethereum's scalability issues by processing transactions off-chain while maintaining security through periodic on-chain verification. Well, to be honest, all of them are very similar. They all try to enhance Ethereum's scalability needs. Anyway, it was founded by Stephen Goldfeder and Harry Kalodner, both renowned experts in blockchain technology and cryptography. Stephen Goldfeder is a computer scientist with a focus on privacy and security in decentralized systems, while Harry Kalodner is a researcher specializing in blockchain consensus protocols. Arbitrum operates by using optimistic rollups, a technology that allows for faster and cheaper transactions. By bundling multiple transactions off-chain before submitting them to the Ethereum mainnet for verification. We talked about this some time ago when we were covering our Ethereum's roadmap. This approach enables Arbitrum to significantly increase transaction throughput while reducing gas fees. Now, that's a part that I personally like. Now, Arbitrum is compatible with the Ethereum Virtual Machine, or EVM. This compatibility ensures seamless integration with existing Ethereum applications without requiring significant modifications. There are a lot of things interesting about Arbitrum, like its 40,000 transactions per second speed, its $2.4 billion market cap, and it has projects in its ecosystem like Herve, Chainlink, and the Graph. Now, Chainlink is everywhere, so that's not really super interesting. It's everywhere. But what is particularly interesting about it is its total value locked. Now, as we can see from here, Arbitrum is actually the fourth network by total value locked. In fact, it has the most total value locked in all Ethereum layer 2 networks. Arbitrum has its own token ARB, and ARB serves as the governing token for the Arbitrum network, enabling token holders to participate in decision-making processes regarding product features, protocol enhancements, fund allocation, and the selection of a security council. In March of 2023, the network allocated 1.162 billion tokens, equivalent to 11.6% of the total supply, to approximately 625,000 eligible users, with about 1,859 ARB tokens per average user or wallet address, according to Dune Analytics. There are two very important things to note about Arbitrum's tokenomics. Firstly, 14% of the total supply has been unlocked, and about 87% of the total supply will be unlocked in 17 days. So be careful. For those who don't know, an increased supply may drop the price if the demand stays the same or decreases. Now, the second thing we have to know about its tokenomics is, just as mentioned before, the ARB token is a governance token, which is something investors would like, particularly with chains that have a high number of active daily users. As we can see from here, we have Arbitrum coming after Solana with about 191,000 active daily users. Arbitrum has ambitious plans for the future, including enhancing scalability further, expanding developer adoption, and integrating with other blockchain ecosystems. Key milestones may include transaction throughput, launching new features, and fostering community growth. Concerns surrounding Arbitrum include potential security vulnerabilities in the optimistic rollup design. Again, optimistic rollups work by rolling up or aggregating multiple transactions off-chain and then posting a single compressed proof of those transactions on the main chain. Other concerns with Arbitrum could be centralization risks in governance structures and competition from other layer 2 scaling solutions. We have a whole lot of them, so yeah, that will be a lot of competition. Moving on to its chart, we can see that Arbitrum had this initial sell-off wave right here, which actually comes to our 1.618 Fibonacci level right here, and then we had a double bottom type situation. Now, this double bottom right here is what I suspect that will happen with Jupiter. Now, what you would say here is, well, I will just buy and hold for the bull market, yeah? But I think that will be too lazy. to me anyway, this first wave to the upside is what I would suspect to be the first wave of its bull market. Let us explain what I mean by that in a short explanatory stuff right here. So if you watched my Elliott waves overview, which I will leave up here or after this video, you would know that it goes like so. Yes, we have the first wave, second wave, third wave, fourth wave, and the fifth wave. So all of these waves is actually one wave. So inside of this first wave right here, you also have something that looks like so. 1, 2, 3, 4, and 5. So inside of that first wave, you also have some smaller waves inside of it, and perhaps a 3-wave correction that would look like so. So that's how it would actually look inside of the waves. And this entire move up could also just be one wave. So this entire move up is one wave. The move down, which will be seen as a big collapse, yes, is also just another one wave that has 3 waves inside of it. So it would look somewhat like so. You get the point now, yeah? So my idea is, and this is just my idea, I mean, you could just buy right here, yeah? And hope that it goes higher in the bull market, but this is my own theory on it. This entire move to the upside is still just one wave, and then you will have the second wave, third wave, fourth wave, and fifth wave. So where do those waves actually fit in with this situation? If you follow my Fibonacci ideas, you would know about how to use the trend-based fib on double bottom situations. So if you have a double bottom that looks like so, you want to take your trend-based fib from this bottom to this top right here and this other bottom right here. The 4.618 is your maximum. That's your own maximum target. It does not mean that price cannot go higher than it. It only means that that's where you want to be out. Still being in at this zone means that you're hoping. When I say that, hey, I see as high as this, it does not mean it cannot go higher than that. It only means that I don't have any other level or anything to suggest that it's going to go higher than that. Note that price can also move back down from the 2.618 or the 3 fib level. So you would have something that looks more like so. So that's how you would have your stuff. This is for a perfect world, and the world is not perfect. You will not always find it exactly like this, but this is just the idea behind, what I'm about to show you. So with Arbitrum, if we exercise the exact same thing, you will see that this is the 2.618, this is the 3 fib, this is the 1.618 right here. So it's not always exact, but this is pretty much the idea. This is our wave 1, this is wave 2, and I suspect that this is wave 3, this is wave 4, and wave 5 should be coming up to here. This would actually mean that Arbitrum can go as high as this level. It is not definite because the wave 5 could also end anywhere around here. This is just a theory. This thing may as well just go to $50 from here. I would like to make a theory. When it works according to my theory, then I can respond to it. So this is just my own theory. So my idea here will be that if Arbitrum can come back as high as this level right here, which is somewhere around $2.13, then it will most likely go higher. Higher to where? To somewhere around $2.87 or even $3. Just by my own theory. And that would actually be marking the end of this first ginormous wave. We talked about a wave inside of a wave, yeah? So all of these waves actually make up the first wave of its bull market, at least according to the theory. So after these waves, where does Arbitrum go? Arbitrum now will come back to the downside. How do we get the downside target? We get the downside target by taking our Fibonacci. Now, I measured this Fibonacci from this wave 3 because it's not definite that it goes as high as here. It might as well just drop. But the idea here is that if I can see Arbitrum come back to somewhere around $1, then that's a good buy zone for me. Not me in particular, because I may not, hold Arbitrum. I may get into it as a trade, I don't know, but basically this would be my own zone of interest. If it cannot come back as low as here, then it's not interesting to me. Now, if we take this as high as so, that 0.786 level also increases. So keep an eye out for that. If we assume that it's not going to go as high as that level, then it's reduced. But if we do see it go as high as that level, then we will have to measure from here. That increases your price target. This is how price targets change. You would find people in media saying, but you said it was going to do this. That's because it changes. You don't know what will happen. You prepare a theory and then you react to it. Yeah? If it happens this way, this is how you would react to it. If it happens this other way, this is how you would react to it. So that's basically what we would be expecting with Arbitrum. If it cannot go as high as this level, we will have to measure our fib levels from the base of wave 2, so the start of wave 3, to the end of wave 3. So if it cannot go higher than this, then we will have to measure it from here, and this will be the retracement level. This is where you get interested. It's about 42% plummet. You could also see that the ABC correction may have already started here. A lot of people are expecting the unlock, so they may not buy into this. So this thing may not actually come up as high as this. But in case it does come up as here, you know exactly what to do. You will have to increase this level like so, and then that will give you your next retracement level. Note that it may also stop at the golden pocket. If you really liked this coin and you wanted to start DCAing, then this would be a good zone for you to start that DCA process. We take our trend-based fib from this low, the low of wave 1, to this high, that's the high of wave 3, and back to the 0.786. This is assuming that it bottoms here. If that bottom can go as low as this level right here, like so, then that's where your third plot will be coming in. But for now, it hasn't happened, so we just have to work with the Fibonacci level. This is just to give us an idea of what its future price could potentially be. There is no way to know, but this is how you get an idea of what that price could potentially be. So if you do that, you will be getting these levels like so. You will be getting the 1.618, the 2.618, and the 4.618 right here as your maximum zone to target. If we do not have it go as high as this zone, then it comes down here. You will be seeing something that looks like this for Arbitrum. So from this zone right here, Arbitrum will be doing anywhere around a 700% return on investment, assuming that we are actually going to have the corrective phase and then the most bullish phase. So in this corrective phase, if you were super interested in Arbitrum, then you want to start dollar cost averaging in the golden pocket right here, which is somewhere around $1.34, and you DCA your way into the dollar mark. You want to DCA your way into that zone from this level right here. Now, this is the more calculated way of going about it. If you were just as normal as everybody out there and you don't want the stress, then yeah, you can just start DCAing even from current price. But for me, I would like to bid lower. When I see the prices going up, buying to me is just a no. When you want to buy any crypto out there, the question you should be asking yourself is, am I buying the fear or the euphoria? Always ask yourself this question. When I talked about buying alt layer, that was the fear. Everybody was afraid that day. When I sent that in the Telegram and Discord, most people would not even buy crypto on that day. But I was buying because I was buying the fear. So always ask yourself, am I buying the fear or the euphoria? Basically, that's my idea for Arbitrum, folks. I hope you did enjoy the video. I hope it was informative and educative in a way. I will see you in the next one. Until then, stay safe.